we created a studio where we help IPs to identify their problems and develop with the IPs and brands together a way to create a Web3 playbook for them. On the other side, we build up a marketplace where we implement Web2 user experience and give a possibility to integrate the labels, artists, to get a Web3 integration into labels and artist shops. And all stands under the sign that everything is compliance and regulated.
You have just heard from Jan Denecke, co-founder and CEO at 12x12, a Berlin-based startup at the intersection of Web3 and music. We will discuss in depth about what impact Web3 technologies will have, and also about how regulated securities token can support project financing in the music industry. So let us dive right in.
Thanks everybody for joining. This is our second session on LinkedIn Audio. We're going to hand it over to Jan in a moment for some probably expanded introductory remarks. Yes, actually Jan's second appearance with the Tokyo FinTech meetup. The first one was about 4 years ago, and our paths had crossed, and I was actually in Berlin when Jan was giving the presentation in Tokyo, funny enough. So 4 years later, we still talk about digital IP. This time we've moved from images and pictures to music. And Jan, by training, is a IP and copyrights lawyer, so he's been in this space for an extended period. So Jan, just take us through the story. What are you up to these days?
Thank you, Norbert. As you just said, it's not our first rodeo on Tokyo FinTech. We have been there, I think, 4 years ago, and back in the days, actually in Tokyo directly, but it's great to speak to the community again. So yeah, as you said, I want to run you actually a little bit through the 12x12 story and what's behind it. And because of the Tokyo FinTech, I actually want to focus a little bit on the security token, which I think is a super interesting topic, especially when it comes to entertainment IP and how actually to find alternative possibilities for project financing. My background is, as Norbert said, I was a copyright lawyer for quite some time before I started my first startup, and I had my touch points with blockchain in early 2016. From that day on, I actually always believed in Web3 technologies, especially for the purpose for the entertainment. If I look at use cases and how you actually can tackle problems in the real world, I think nearly 70% of it's legal driven when it comes to blockchain and Web3 technologies, and the other 30% is technical driven. With that mindset, me and my two co-founders, Philipp and Michael, we started in March 21 the company called 12x12. 12x12 stands for the 12 inches of the old vinyl, being the most successful use case in the music industry ever. What are we doing? We are actually, on the one side, a technical and legal infrastructure provider helping the music industry to enter into the opportunities of Web3 directly. And on the other side, we provide a solution to utilize music rights to get financing without losing rights or asset and stay in full control of their assets by tokenizing existing or future revenue streams. Having said that, I think it's worthwhile to have a little forward-looking statement in here. What we realized are actually two facts. I think one of it is if we look at Web3 right now and at the market, we can see that the market is not yet there. That's the one fact we see. But on the other side, you can see that there is a consensus that Web3 actually provides huge opportunities for the IP industry. If we look first at the inefficiencies for music in Web2, we realize a lot of these things are not only applicable for music, they are also applicable for other entertainment IPs. So one thing is actually that we can see a diminished value of the core asset music itself, which mostly is driven by the arbitrary retrieval of music. So basically you can get everywhere you want music for free. So you don't have to pay a lot of money, which directly leads to the point that the value of the core asset is actually diminished. If you look also on the other side, you don't really pay for ownership right now, you pay for access, which means that the originality and the digital ownership and the scarcity of music also is vanished over the last times. Another problem you have in Web 2 world is the identification of your superfan community. You probably know who actually your followers are. You probably have limited access on data on your followership in music, but you don't really can identify with the intermediates, Web 2 platforms, who actually your superfan is. And last but not least, it's super difficult via the existing tools in a scalable way to incentivize your fan community. And if we are talking about incentivation, I'm not talking about basically giving them some direct access to whatsoever. I'm talking about incentivation with real assets like revenue streams, for example. So what are the opportunities we are looking at in the music industry? What Web3 actually brings? One of it is that you can revive physical sales again. With Web3 technologies, you are able to create in a new way digital ownership, which means that you can give ownership from the artist back to the fan, which means that you can actually create a new way of digital ownerships. Another thing is that you can reprocess catalog content. So there are huge catalogs with the new IPs that are lying around and you can't really revive them and put them back in a new dress. And with the Web3, you actually are able to do that in a perfect way. Having said that, to actually tackle these huge opportunities, you need to overcome the barriers for the music industry to enter into the new Web3 market. And you can actually differ them into three different kind of categories. Big IP brands are not able to enter into that market right now, which brings them to that huge opportunity. One is knowledge, the second one is regulation, and the third one is actually the accessibility. If you look at the music industry or the entertainment industry, the biggest problem they have is actually the knowledge around the Web3 market, which comes along with a lot of legal and tax obstacles. So nobody really knows how to account crypto in their bookkeeping, how to actually deal with all the different kind of regulations, which holds you away from accessing that new area. So every time when we are actually talking about great ideas to implement for bigger brands on the Web3 side, we can see that mostly it's been avoided because of the legal issues and the accounting issues we are having. Other than that, we see that the new technology is always a problem to understand how do they deal with blockchain, what is it? And last but not least, they don't have a real Web3 playbook to enter into that market. That comes along then with the question of regulations. Everybody is actually afraid of the complexity of the legal frameworks. And in the IP industry, one thing that comes on top of it is the fear of the rights infringement. So if they want to put in their IP into the blockchain space, they don't know where it's actually going and what is happening around. Last but not least, we have the problem of accessibility. The accessibility is a problem, first of all, of Web3 poor user experience, but the biggest issue that we are looking at is the lack of interoperability. So right now, if we look at the market, we have different kind of platforms which create islands, but if you want to transfer rights or IP from one to the other, you always have the problem that you not only have a technical bad interoperability, but you also have a lack of legal interoperability, which means that if you, for example, create your own marketplace with your users because of data protection, because of protection, you can't really allow them to access other platforms. And on the other side, it's always difficult to allow them to transfer the IP over to other platforms. And last but not least, I think one huge opportunity is actually participating at the secondary market sales. But to participate on the secondary market sales, it means that you can take part on the flipping fees. But if you don't know who is actually paying that money from A to B, you will have a bigger problem on AML and other related topics. So having said that, how did we actually solve this problem in a very high-level way? We created a studio where we help IPs to identify their problems and develop with the IPs and brands to get a way to create a Web3 playbook for them. On the other side, we build up a marketplace where we implement Web2 user experience and give a possibility to integrate the labels, to get a Web3 integration into labels and artist shops. And all stands under the sign that everything is compliance and regulated. And how are we doing that? We're basically licensing the content from our clients and then sub-license it down to the customer itself who's buying it. The advantage of this is that we internally create the accounting system and the client itself doesn't have the problem to get in touch with any kind of crypto payments. This is on the utility token side. What are we doing on the security token side? So I think, as I said in the very beginning, the problem right now is that fans are only limited, incentivized by the artist. And I think there is a big need for fans to participate on the success of artists or labels they're actually fans of. So how are we doing this? We are talking about real securities here. So we identify different kind of revenue streams within the music industry, which could be for a specific song, a specific artist. It could be coming from publishing rights or from master rights. And we take that revenue stream and tokenize that revenue stream in creating an issuer company, which is actually where the revenue streams are tied to and then tokenized, and the token actually are paid out to the token holder itself. In that case, we as 12 by 12 are incorporating the issuer and dealing with all the tokenization and minting and listing, and we partner up with a security exchange, the 360X AG in Frankfurt, which is actually responsible for banking, custody, and trading to the investors itself. The advantages that we can look at right now is that if you only talk about revenue streams for the artist, for the label or the publishing company, it means that they do not have to give away their control over their assets itself. So we're just tokenizing a specific revenue stream for a specific term, which makes it much easier to deal with. On the other hand, the huge opportunity that we can look at is that it opens up also for smaller brands or for smaller publishing companies or labels the opportunity to create new project financing. Because the good thing about music is that music is a viable investment now, and it's very well documented how the traction looks like. If you take rights, which have been last for quite some time in the industry, you actually can take the track records of it and show the investor how high was the fluctuation of the revenue streams and how good was it actually performing in the past, and what are the outlooks to it. On the other side, there is a huge advantage because if you look at the revenue streams, as I said in the very beginning, you can specifically focus them on specific use cases, can specifically pick out a specific song, you can actually take out a specific way of usage that you can tokenize, and you don't have to fully take your whole asset as you normally do it. So coming back to that topic, project financing, what does it mean for a label, for example? A label or a publishing company is investing into future artists, which requires a lot of capital because you do these upfront payments. So if you already have an existing catalog with cash coming in and with a track record, you can easily take that to utilize it for investing directly into new projects. You basically start front-loading your revenue, which is coming in a little bit later normally, and use it to invest into new markets. It's important to understand that You also can combine professional investors with the retail market, because normally if you're talking about assets which, for example, have a value of 10 million or 5 million, it's very difficult to identify the community of that label or artist actually can pull that full amount to get all tokens or securities actually bought. So what you are doing is you basically fill it up with professional investors and keep a smaller amount for retail, where you actually can be sure that it's been taken over. So that leads to two advantages. On the one side, it secures the retail market because you piggyback on the due diligence of the professional investor in that specific investment. And on the other side, you have the possibility to open up a super attractive asset to the retail investor market, which directly affects the binding between the artist and the fan itself, because the fan actually can participate in his artist's success directly. How are we actually looking at the market right now? What we are trying to do is to tackle it in a top-down approach. So we are not looking at emerging artists right now. When it comes to the security token, we are trying to identify bigger artists and bigger brands to showcase that use case, and then in the next step, move down to the emerging artist side. Why are we doing this? Because, as everybody knows, is creating a full regulated security token comes along with a lot of difficulties when it comes to regulation, which can be for the development of itself bigger hurdles, but in the end, it's a super advantage for everyone, because if you have a fully regulated instrument, it gives both sides, the investor and obviously the buyer side, a much higher trust into that investment vehicle. That doesn't only apply for the instrument itself. Obviously, the instrument itself has to be regulated, but on the other side, you also need to deal on a regulated exchange. That's why we partnered up with 360X here, which is backed by the German Stock Exchange and Commerzbank. And they basically created that regulated platform where in the end, the different security tokens can be traded. If you look at the investor side, investors are not only interested in music. That's why there are different kind of verticals working on that exchange, which is real estate and art, to actually create a bigger liquid market on the other side. So putting that together, we created a different product portfolio for music. We call it actually product templates, which we offer to the music industry to enter into Web3. And therefore, we understand ourselves not directly like a Web3 platform for music, but more a Web 2.5 platform, because we are obviously right now entering into the Web3 market without utilizing the full opportunities of Web3. We are in a closed up environment utilizing the Web3 technologies. So on the products we are using on the utility token, the most important one is actually the digital vinyl, where we provide the industry the possibility to actually create digital ownership and sell it directly in a normal release schedule to their fans, as we know it from back in the days with the vinyl itself. There are other templates. I don't dive too deep into it. It's access all areas, which is actually a possibility to distribute and identify your superfan better, where you can have one-on-ones with the artist or even create a direct access via this Discord channel. On the other side, we have the fan experience, which is our own created metaverse. And then last but not least was the one I already was talking about, the security token itself. We differ it into two different products. One is called 1,000 Fans, which is more orientated to the retail markets and directly to the fan. And the other one is the Music Invest, which is addressing the professional and institutional investor side in investing directly into bigger music assets. To put it in a nutshell, the advantages that you actually can get out of it is via the product templates to be integrated in a normal music and distribution channel, would be creating additional new revenues. And as I said already, create front-loaded revenue also. You can new revenue streams through new markets via the metaverse, and you can participate on the secondary market without actually opening up directly to incompliant and unregulated other markets. And last but not least, you can actually utilize your fans to create new financing for the music industry. These are the biggest advantages actually you can get out of it. Last but not least, we created our structure at 12 by 12 in two different kind of layers. One layer is the security layer, which is regulated. The other one is the utility layer, where we are talking about non-regulated tokens. Both are actually addressing the music industry, but one is addressing actually the capital market and the other one is addressing the music market. This is it, to put it in a nutshell.
Thank you very much, Jan. Who would have thought that music can be so complex? Quite a few aspects in that. Let's go back to the origin story for a moment. So when you created 12 by 12, I'm sure you looked at the different markets for IP, and in the end, you've chosen music. Can you talk us through a bit what you've seen? And you alluded to it a bit in saying that the market projections are very clear where the market is going. And music, obviously, over the last 30 years or so has been through a number of waves with the digitalization first, and it was the CD-ROM, then it was like the shared platforms where basically all the music was stolen. Then we got into streaming and we got paid again. And live music became much more important as well. So when you started this off and you were looking out into the next decade, what did you actually see in the music market that attracted you enough to say we build a business around it?
Yeah, I think there are two main aspects to look at. I think one thing is the music industry always had a huge potential to be the forerunner of new technologies, even if it sometimes doesn't look like it. Why is that? Because most people are actually listening to music, and some of us is always a fan. When I was 2016, 2017, actually realizing that there is a possibility to create NFTs, the music industry actually, or the music IP was the first one that I actually was looking at, because it is from the right structure perfectly done. And especially when you look at the digital vinyl, for example, and the vinyl itself, there was always a huge opportunity to start to look at the collecting market. So that's actually one part of it. And I would say the other one is, if you look at the music industry right now, and you look at the numbers, 85% of the revenues are coming from streaming incomes. And the music industry is right now doing better than ever. But there is a dilemma, which is called the prisoner dilemma, because they are highly dependent on the streaming income. So they actually have to look what are new opportunities to create or to actually come out of this prisoner dilemma. And therefore, Web3 and digital ownership is a huge opportunity for them to get back into the D2C market. And I think that was the other part where we were looking at and said, okay, there is something which the music industry can't oversee, and where they actually have to go seize the opportunity now. And that's what we are realizing for now. So these are actually the points why I think Web3 development, how we see it right now, is a huge opportunity for the music itself and also for us.
Thank you. And I must admit, music is not my industry at all, so I actually had to do some homework before we got onto this call. And the same way you said, the music industry is doing better than ever. It seemed like, as far as recorded music is concerned, we hit the bottom around 2014. And in some industry projections I've seen, basically from 2014 until 2030, it's a 4x in terms of revenue for recorded music alone. And we're about halfway there. So we doubled since 2014. So that's why I think the industry feels pretty good. But there's another 2x coming in those projections. And the strange things about all of this is another number I dug out is that if you look at the entertainment spend that we have, or the music allocation within what we as human beings spend on entertainment overall, is still 40% below the all-time peak, which was in 1998, apparently. So there is lots of room for growth and maybe more spend coming when you get into all the real Web3 and metaverse platforms, as you mentioned. You talked about the digital vinyl on your marketplace right here. It's from your recent LinkedIn post. It's a Portrait XO remix. And the question I think that's always about these NFTs ultimately is, what am I actually going to buy? So I can buy this now. There are 46 tokens left for €12 a piece. And if I click buy now and I get it, what do I actually own at the end of the day?
Yeah, so first of all, I think the wording NFT is always, out of my perspective, always misleading. It's, for me, it's more, I call it more a utility token itself. So what you get in the end is what you weren't able to get beforehand. And I think that's the unique part of it, is the digital ownership of the IP itself. The digital ownership itself is always described in the token terms where you actually look into it. And that's why I think it's super important to create token terms which are applicable to the existing law. If you compare it the best way to Spotify or other DSPs, with your subscription, what you get is in the end access to listen to music. But the moment you don't pay your access fee, your subscription fee, you're losing the access to the specific music. On the digital ownership, it's completely different. So you pay for something and you get via the token, the digital ownership into your wallet, so that you are not dependent on the subscription fee, but always take that asset with you within your wallet. And so if we look at the Portrait XO drop, what you receive there is the digital ownership of that specific remix, what you actually can buy, what you actually are paying for. And that also describes or explains a lot about the pricing policy. I think NFTs, how we look at, most of them are project driven and mostly marketing driven, and they don't really explain the worth of the digital ownership and over exaggerate in the pricing policies. If you look here and you pay €12, you actually get the digital ownership. And on the other side, the good thing what you're doing is you incentivize or indirectly financing your artist you like, because 85% of the proceeds are anyway going directly to the artist itself. And about what I said in the beginning, I think creating or having the possibility to own things again helps to directly pay out into the value of the asset itself and creates originality. And in the end, if you put in scarcity, it only can be good for the artist who's creating it.
So if I have the digital ownership of that remix, does that mean that ultimately if somebody else were to play it on the radio, for example, they got their hands on it, it's a music file at the end of the day, I would be entitled to royalties?
You could be entitled to royalties, but that's actually where you enter quite dangerous waters, because the moment as you really put in specific rights which are going over private usages, like as we know them from a printed CD or printed vinyl, you're probably offering a financial instrument because you're actually putting some income streams directly into the token. So that is something that is in future definitely thinkable and what we are planning to do. But you need to implement a lot more onboarding hurdles actually.
We talked about the superfan, and this feels maybe, I don't know if it's the right parallel to draw, but I draw a parallel to gaming. There's lots of casual gamers who maybe use free-to-play functions, and those people who really get into it and they buy the superpowers, the sword that kills the dragon, etc. And ultimately then there's a relatively small group of gamers who account for most of the revenue. Is that ultimately something in music too, that if you can create these special collections, limited editions, and I think you said like even the access to the artist for private chat, that streaming revenue aside, which is significant of course, but that you can generate much more revenue from this small group of superfans?
Yeah, I think 100%. The superfan topic is something every industry is talking about. One of the biggest problems in that space is that with the Web 2 platform business growing so fast, everybody's only looking at the followers, but the followers itself are not really the ones that any IP actually should target. The superfan itself is the one who's spending most of the money in the end to support his artist and is willing to stick longer on the artist sides than anybody else. But how do you want to identify him if you only have access to limited data via the Web2 platform? If you look at that circle you can create, you have in the end around an artist, you have that Bandcamp community, and then you have a smaller amount of superfans and you have a huge amount of followers. But the followers itself are, I think, more or less not worthless when it comes up to reach and to marketing, but when it comes up to spendings directly for artist goods, then they become more or less irrelevant. And the question is always, it's not a one-way road, it goes both ways. So I think the artist itself also has to rethink how they are actually distributing their goods into the new communities, because the superfan nowadays is not only waiting for his artist to stand up and present, he wants to be acknowledged in the other way. And I think that's where the Web3 technology unfold their full power, because this is where you actually can create in a very efficient way and scalable way a two-way road from artist to fan and from fan to artist. So the discussion around the superfan, I think, will be very quickly solved. And you already can see some of the real artists who are really addressing the superfan community very quickly become very successful because they have that trusted community.
Let me switch quickly to the security tokens. And I think maybe over the last decade, we've seen music catalogs sell for significant amounts of money. And that was a time when we had low interest rates and maybe zero interest rates, where these assets became attractive for the yield that they provided. We're still providing that yield, but the environment has changed a bit. So as you're working through your first issuances there, do you have a sense where you end up in terms of the yield on these products?
Yeah, we are still trying to identify that in 100%, but one thing is very clear. Music assets are always a very attractive investment, and that's because of the future perspective music in the end has, and it's an asset that always will be there. And we will have more places actually to play music. We will have more people to listen into it. So that's all given. And I think that's the reason why obviously the Hypnosises or KKRs in this world are buying bigger catalogs, and not only catalogs, but any kind of rights they can find and monetize. But on the other side, you always have to see that there is a big middle shift of that creator economy that don't have actually access to these investors. And I think that's where a huge opportunity lies. If we are not talking about the catalog of Tina Turner or Fleetwood Mac or whoever, but if we are talking about bigger or even huge national stars, which do not create huge international revenues, but itself become very significant. If you look at the numbers, I think that's the target catalog type we are looking at. And I think that's also something which is super interesting for the investors. And as I said in the beginning, you can also combine these different kind of catalogs and create kind of fonds where you have more people out of the creator middle shift. In the end, there is a big variety of potential products you can create. Our aim is it to create standardized products, because it's important also then for the secondary market to have it very clear what you are offering and what kind of catalogs it are and what kind of traction they have. So I think to answer your questions, it's still in the making, but we have a very good feeling that it will be a very viable product in the future.
Keep our fingers crossed there. And clearly beyond the actual yield, there is a diversification aspect. So in the same way that some people might buy wine funds or so risky, you can mix in a bit of music into your portfolio, because as an asset class, it should have lower correlation to your overall investment. I was thinking about threats to your business model, or maybe to the music business model as a whole, and we can't get around thinking and talking about generative AI these days. And clearly, if I look at photos or images, if I write a blog post and I want to have a suitable image, before I would maybe go to get a stock photo and even pay for it to have it all watertight. But now I can just use some prompts on DALL-E and get my very unique and tailor-made image into my story. I don't even have to spend time searching for it. For music, I think it's a little bit further behind, but still there are things coming. Ultimately, maybe for you it doesn't matter where the music originates, although maybe that's an IP lawyer question, right? Is AI-generated music in the same way protectable as human-generated music? But is there a risk that in the future 80% of the music that we're listening to is actually AI-generated? And what does it mean for what you're doing?
Yeah, 100% AI-generated music is something that is on the horizon and already existing. You just mentioned also the Portrait XO drop. So it's a very famous AI artist. She's creating itself, but also creating AI-driven music. This is something that definitely will happen. The question if it will substitute music created only by the artist itself. My personal opinion is that won't happen. If you look at the way how it's going to be protective, I think it's protectable via the existing copyright laws, because in the end, the code, you have to write the code for the AI, and the code is being written by the programmer / artist itself. So I think that's something you always can root it back to the origin. For me, I would say it's more a way how you actually, it's like creating a new instrument itself. I think the AI-driven music is not seen like a creation itself. It's like how you actually play the music that you are thinking of. For us, I don't think that it's really impacting it. It is impacting us, obviously, but it's not really impacting our business model. It's more complementary because we have more possibilities to create more music, but also to identify the owner of it and transfer it via digital ownership. And therefore, it doesn't make any difference if it's created by a person itself or by AI.
Cool. Certainly very interesting space. And as we discussed the market, we're still at the very, very beginning. So it's a long wave that goes upwards that you can ride. And you're the first company that is actually doing the security token backed by music, which is coming soon. It's in the works that you said. That will be absolutely a significant milestone. So we're looking forward to reading the press release on that. And otherwise, thank you, Jan, for the extensive explanation of what 12x12 does and the insights into how to shape the future of music in the Web 2.5 and Web 3 environment. It was truly fascinating. Thank you very much.
Thank you, Norbert, for having us.